Welcome to the Lend Academy podcast, episode number 273. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lend It Fintech. Today's episode is sponsored by Lend It Fintech LATAM. The region's largest fintech event dedicated to lending and digital banking is going virtual. It's happening online on December 8th and 9th. Pandemic or not, LATAM is still the hottest region for fintech in the world, and Lend It Fintech LATAM features all the leading players in the region. So join the LATAM fintech community online this year, where you will meet the people who matter, learn from the experts, and get business done. Lend It Fintech. Lending and banking connected. Sign up today at lendit.com/LATAM. Today on the show, I am delighted to welcome Manuel Silva. He is the general partner at Mouro Capital. Now, Mouro Capital, you may know them as their former name, Santander Ventures. Well, they've not just rebranded, but they've done a spin out of this, which we talk about on the show. But the main reason I wanted to get Manuel on was to really talk about the Latin American fintech space. He has a deep experience here, been doing investments for many years, some of the more successful companies in the region. So, we talk about the Latin American region, why it's so interesting, why there's been such a surge in fintech in recent years. We talk about some of the biggest companies in the region. We talk about how some of the big platforms like Mercado Libre are coming in. We talk about the different regions where there's entrepreneurial activity and the future of Latin American fintech. It was a fascinating interview. I hope you enjoy the show. Welcome to the podcast, Manuel.
Thanks for having me.
My pleasure. So I'd like to get this thing started by giving the listeners a little bit of background about yourself. Why don't you give us some of the career highlights, tell us where you're from, that sort of thing.
Yes, no, of course. Manuel Silva, general partner at Mouro Capital. Before that, Santander Ventures. Before that, BBV Ventures. So as you would imagine, I'm Spanish, highly indexed in kind of corporate VC world in the Spanish banks, California, London now. And now leading Mouro Capital, which is, we'll talk about it in a second, but which is an independent VC focused on fintech.
Mm-hmm. Mm-hmm. Okay. And where are you from originally?
The easy answer is Madrid.
Madrid.
Nobody's really from Madrid, so there's a longer answer that involves all the regions.
Okay, we'll leave it at that. That's okay. Okay, so we've known Santander Ventures for many years. You guys have been very active in fintech, and then from what I understand, you spun out the corporate VC from the bank and rebranded. What was the thinking behind that move?
That's right. And I would say the rebrand is kind of the least of the changes. I think the more important one, as you referenced, is the spinning out. And really the thinking was really about alignment and about being competitive in a market that's increasingly competitive, right? At the end of the day, now in our current format, we make our own decisions on the investment side, and we have much more aligned incentives with our portfolio, which effectively what that means is that entrepreneurs feel that we're much more on their side, and nobody kind of questions the fact that maximizing return is our main priority, which helps be, as I was saying, more competitive, faster, et cetera, et cetera.
Right. So people like entrepreneurs will feel more comfortable that you're not just doing this because the bank wants to get the tech.
That's exactly right. And I think over time, we're working on that quite a bit with our existing portfolio, but over time, you'll see that our value proposition to these entrepreneurs are going to be much more focused on them and not only on the relationship that they can establish with Santander as it was in the past.
Right. So are you like, from my understanding of Santander Ventures, Santander was the sole investor, the one LP. Is that still the same, or are you taking on more investors?
No, that is still the same, but now I would say Santander is an LP, meaning they behave as such. So as opposed to before, we were basically a subsidiary of the bank.
Right. Got it. Okay. So maybe you can talk about the investment focus. What are the regions you're focused on? What are the types of companies, that sort of thing?
Yeah, no, of course. So, over the years, both personally and in the previous project here, we built a fintech specialism, and I think that's really what we want to stick at. So, we're primarily fintech investors, enterprise, direct to consumer, so both sides, really think about the whole value chain. So, within fintech, we'll touch pretty much anything. But we think it's important to be specialized, to be able to understand businesses early, and B, help entrepreneurs with that that extra piece of knowledge and connections and network that is oftentimes the most complicated one in such a regulated industry. Now, in addition to that, we're expanding our investment mandate and kind of our thesis to try and not only cover kind of where the industry is at now, but also kind of what's coming next, right?
Mm-hmm.
As a result of that, I mean, we're big believers in reinventing fintech infrastructure. We're big believers in new financial products that may emerge as a result of societal changes. So we're very kind of looking at things that are more fundamental. And probably you'll see us invest a little bit outside of fintech, not for the sake of it, but mostly because we think there's a strong connection between finance and maybe other industries, mobility, logistics, education, maybe health as well, that we want to explore from a financial services angle. So it's very much relevant to the future of the industry, but maybe a little bit expanded to what people may have been used to in the past.
Right. Yeah, that makes sense. I mean, I know that, Zach from Plaid said at our Lended event a few weeks ago that, really every company is a fintech, or what he clarified what he meant was that everybody uses like fintech in their business, because every single company has a finance operation and they want to make it more efficient. They want to make it more high tech. So, whether it's just a banking app or a payroll app or something like that, there's often a fintech component now to every business.
And just on that, it's interesting because that resonates very well with our thesis. I mean, at the end of the day, I think we're going back a lot to the utility of finance and financial services as opposed to the products per se. So, I've always thought that, nothing very novel, but, that people don't really wake up in the morning wanting a card or a mortgage. What they want is, what does that enable me to do that I couldn't do today, right? And at the end of the day, if you look at everything from that perspective, 100% agreed with Zach, but also it opens up, as the economy changes and as new industries emerge and as, COVID changes the way people behave, if you look at things from that lens, we'll try and spot also kind of what are those emerging spaces where utility can be brought through the lens of financial services, through the bank, the experience, basically.
Right. And then, so what geographic regions are you interested in? What are some of the regions that you have investments in right now?
Yeah, so on that front, we'll stick also to what we used to do in the past, which is pretty broad, as you would imagine. So we've traditionally invested across the Americas, so LATAM and North America and Europe, with a strong focus, of course, in London. And then we have a few investments in Israel. And I think we'll stick to that. Theoretically, we could invest elsewhere and we'll look at things that we know maybe elsewhere, but we'll probably stick to that. Most of our current portfolio is in the US. I think a slight majority. And then, as I was saying, in Europe, it's mostly London. We're looking at other ecosystems in Europe that are, creating companies that are really interesting and that may be, better priced, actually, than when you find in London. And then LATAM, which, I know is part of the conversation. LATAM is a fascinating part of the world that we've known for a long time. We have a couple investments in Brazil, a couple investments in Mexico, and very excited about the region.
Right. Yeah, I do want to talk about LATAM here in some depth. So let's, maybe we can kick it off just by giving your thoughts on Latin American fintech. Obviously it's been a challenging year for many companies, but also others have done quite well. Why don't you just give it? How have you seen the pandemic impacting the region in the fintech companies in the region?
Yeah, well, I would say probably. It's not 100%. It's quite similar to what you've seen elsewhere. So at the end of the day, certain parts of the real economy have been stressed. Digital economy has gone up. Access to capital markets has been maybe a little bit more challenging. Lenders have seen a little bit more of non-performing loans. All that is pretty common to all the geographies we invest in, and LATAM is no different. I think nevertheless, LATAM really comes from very, very, very strong fundamentals when it comes to the opportunity that was kind of evolving even before COVID and through COVID. And so my hope is that things will continue being like that, right? So if you think about LATAM more from a fundamentals perspective, it's a deeply underserved, region from a kind of digital financial products perspective. And that's why most of the large companies that people would know about in LATAM are actually kind of direct to consumer propositions that are not really super far away from what banks should be offering, but they just do it better, and they just do it in a much more kind of, contemporary way, if you will, right? The interest rate rates across the region that are still very high have allowed for a lot of these models to be much more resilient, which is good. So, our actually all our companies there are lenders, and they've all performed actually extremely well, just because they have a lot of cushion given the interest rate situation to take a little bit more losses, or so. So the models are quite resilient. And then similarly, I mean, we're excited about our latest investment there, a company called 855, which lends to the digital economy. That is a living proof that digital is booming over there, and that the shift to e-commerce and mobile experiences is booming, and that the opportunities are really shifting towards that, right? So very positive generally about everything that's happening in the region despite COVID.
Right. Yeah. And so, I mean, I've talked to a few of the CEOs in the region in recent weeks, and there's concern that there is some investors, particularly outside investors, are kind of putting a wait and see as far as new investments go into new companies. Have you noticed a decrease in in outside VC investment into the region?
I would say yes and no. So maybe there's a different way of responding to that. So if you look at the recent years in Latam, I feel there has been a lot of very uneducated capital coming in, right? For lack of a better word. And by uneducated, I mean, the dynamics of the markets in Latam, especially the two big markets, which is where most of the foreign capital has gone, Brazil and Mexico. The dynamics of those two countries are very, very specific, and you need to really have a thesis and understand how the market works. Otherwise, you may just fall into a little bit of a cookie cutter type of strategy, right? And so I feel that over the past few years, there has been a lot of capital that didn't really think much about the region, that were just trying to find commonalities between things that have worked elsewhere and things that were emerging there, and have invested like that, right? So I think some of that capital, naturally, because they may be less, versed in the region, they're the ones who have withdrawn. Right. And so, on a statistical basis, it is true that there's less inflow of capital, but I would say on a quality basis, that means that the people who really bet and understand the market are the ones staying there, right? Which I think for the entrepreneurs, that's actually good news, because that means that there's probably way less they need to explain to whoever is interested in investing in the region, because they have a strong thesis and they believe in it, right? I think the other thing, just to answer your question, is I feel there has been a concentration and a flight to quality, right, in that foreign capital coming through, right? So we've seen, the likes of Kavak in Mexico reaching great valuations. We've seen, Clar, a neobank in Mexico that we invested in, just got money from Naspers. It was, one of the largest, I guess it's a Series B rounds in Mexico the year. So there's still foreign capital coming, but I think they're very picky, and they just are somehow condensing around the best opportunities, as opposed to be a little bit more of an equalizer of maybe subpar opportunities.
Right. Yeah, we certainly have seen some large funding rounds in this year. But I'm wondering about one of the things that we notice is that there's a lot of entrepreneurial activity. There's a lot of new companies that are still pretty small. Do you think they're going to find it harder to attract capital now that some of the other players have left, or I wouldn't say left, have put their investments on hold?
That's a good question. Honestly, I don't know. What I would say is the local early stage ecosystem has sophisticated over the years, right?
Okay.
And I think they've reached a point where some of the local funds that are naturally more resilient because A, they're local, and B, oftentimes in their own kind of investment policy, they can only invest locally. So, there's nothing else they can do anyway. Some of those guys have raised much larger funds than they used to have. They've professionalized, etc. So I guess the availability of early stage capital, but that's what you're referring to, is much higher than it used to be like 6 or 7 years ago. So I feel maybe, there's going to be less of a shortage of that, just because those bigger funds have managed to raise from international LPs in this case, right?
Right.
So, and then also, it's still true that, interestingly enough, it's less true now than it used to be, but it's still much cheaper to build a company in Latam than in many other places of the world. So,
right.
You can get a business up and running with $3-4 million, where you may need, 10 times that in Silicon Valley just to get to the same point, right? So,
right.
Capital goes a much longer way.
Right. Okay. And what about exits? We haven't seen a lot of exits in LATAM yet. Is that, what do you feel? Obviously you're an investor yourself. Do you think that we're going to see exits soon, or what's your thoughts on that?
Yeah, that has been the pending question of the region. and in other regions in the world. I mean, I don't think it's unique to LATAM, but it's true that each time I pitch LATAM to outside LPs or to people who are just interested in more the institutional, they always say, where are the exits, right? I mean, I'm positive on that as well for a number of reasons, right? I think that there's a few companies that have reached a point where they could be candidates for more of a public markets exit, and I think hopefully that's going to create a little bit of a snowball effect in a positive way to make markets more receptive, and also investors in the public markets more receptive to this kind of new asset class. And in particular, I think in Brazil, you don't need to educate the market about the tech companies. There's a few examples, Stone and a few others that have been quite successful there. So I think, but interestingly enough, I think there may be a little bit more of a consolidation play as well, where some of the larger fintechs may be starting, or other platforms may be starting to buy. And so the exit may not necessarily be through public markets, but more from a platform and consolidation perspective.
Mm-hmm.
So I think it's still early days, but I think that can drive an interesting movement where actually that can actually impact the competitive landscape in the region quite interestingly, I would say.
Right. Okay. So when you look at the region itself now, and across not just Mexico and Brazil, but across the other countries in the region, what do you see as some of the most interesting trends that you're watching?
From a geographic perspective,
just from a fintech perspective, what's happening in fintech that you think is really interesting?
Yeah, so I think maybe a couple of things that I think are interesting, maybe 2 or 3 things. I would say the first one that I think is really interesting is that finally companies are starting to have more of a regional ambition than they used to have. So back not that long ago, the story of LATAM was really the story of Brazil for Brazil and Mexico for Mexico, and then the rest was kind of non-existent, right? And I've always had the theory that the smaller countries, which have very good talent and that don't have large markets, they will start creating regional companies, and we're starting to see that. And also we're starting to see the larger companies in Brazil, Argentina, Mexico, Chile to a lesser extent start being more regional and expanding, and So I think the regionalization of fintech, I think is a trend that we'll see over the next 2, 3, 4 years that I think I'm really excited about, because that's when you're really going to start seeing well-run companies have a very, very large critical mass and really change competitive dynamics, right? That's one thing. The other, a couple of things that I'm also there's one thing I'm interested in and one thing I'm inquisitive about. I'm a big SME finance or SME fintech supporter, and I think LATAM is moving little by little towards that piece of the market, which I think is really interesting because the data play may be a little bit more interesting, the economics are better, et cetera, et cetera. So I think the next thing to watch for is probably SME fintech and mid-cap fintech, which is a little bit new. And I think the part that I'm a little bit more inquisitive about is whether there's going to be or not an emergence of enterprise fintech in LATAM, right? Meaning most of the companies we know over there are companies that are great at adapting a foreign business model, adapted locally, make it work. But at the end of the day, a lot of the building blocks from the technology perspective are imported building blocks, right? I think at some point that needs to shift, and there needs to be infrastructure fintech being built for the region. And I hope that's the case. But I think it's still early to see. But definitely, if anyone listening to the podcast is innovating there, they should definitely reach out to us, because we're really interested in that. And we're big believers that local players will be the local winner.
Right. So you think it's more going to come locally than from, say, the Plaids of the world, Marquetas of the world coming into LATAM and making a presence there?
I think so. I mean, if I've learned something in LATAM over the 15 years that I've been traveling and doing business there, and a lot of it is kind of in venture or in investing, is that understanding the market dynamics and having access to regulators and to executives, et cetera, that makes a total difference. And I think it's really tough. You need to take a plane and travel 12 hours. I think that's really tough.
Right. Yeah. So, I mean, you talked about scale, and so I want to talk about the fintech that probably has one of the largest in the region, Nubank, and it's interesting that they are, they're acquiring companies now, they're expanding their offerings, they're almost sort of, becoming a platform. And I just read they got 30 million customers now, which is staggering, more than any other fintech in the US or Europe. So what are your thoughts on on digital banking? Nubank being obviously the clear leader there, and their play, it seems to me anyway, to become like a banking platform almost.
Yeah. I mean, to respond to that, I would go back to kind of an earlier comment about the utility of finance, right? I mean, at the end of the day, I think the natural evolution of neobanks is to really be an ecosystem where a user can find utility to a lot of their needs. And so, whether you call it platform or whether you call it ecosystem, but at the end of the day, it's really about having a very high share of wallet with a particular customer, and creating data synergies and creating like a rich data environment so that the products are even better and more kind of relevant for the client. And it's about capturing that entire relationship to the extent possible, right? So what they're doing makes total sense, because at the end of the day, if there are things out there, A, why would you reinvent them? And B, if you can pick them up and kind of erase that piece of the competition, then you may as well, right? I mean, thankfully they've reached levels of valuation and levels of cash generation that make them, very healthy and very capable of actually doing these type of transactions. So why not, right?
Right.
But I think, I think that's kind of where the market is going. If you look at it from the utility perspective, how can you be around the client's experiences, and how can you help them holistically as opposed to just offer a very narrow vertical product?
Right. And speaking of platforms, one company that you've invested in is Creditas, and I had Sergio on the podcast earlier this year, the CEO, and they really interesting to me because they started off as a consumer lender, and they've done really well. They've got decent scale now, and now they're the company that they're going off into other areas really unrelated to lending. And I'd love to get your take on how you see that. I mean, it's a slightly different approach to what Nubank's doing, but it's still sort of this broadening of their offering.
Yeah, no, but at the end of the day, I think it's exactly that. It's exactly the same rationale of increasing share of wallet, and even from an economics perspective, making your customer acquisition cost more efficient, because you can basically sell more products or get more revenue lines from the same interaction and relationship. But yeah, no, I mean, I think the logic is the same, even if, as you say, the angle they're taking, which is more of a credit first, longer term credit, secured credit first angle, is a little bit different. And the great thing about Brazil and the region, I mean, Brazil in this case, but the region at large, is that there's enough market for a number of players to be successful.
Right. Yeah. And it's interesting to me because, particularly with the Creditas, like I don't see anybody in the US or Europe doing what they're doing. That seems like it's fairly unique. Is that because something specific about Brazil, or is it more about Creditas?
Well, I think it's without putting words in Sergio's mouth, but I think, what's interesting about both companies is that they both started in a niche that was really underserved, and they became winners there and then expanded, right? And so one thing that we were very interested when we invested in Creditas, I want to say 3.5 years ago, is that the product that they were launching, which could be equivalent in the US to a HELOC or an equity release product, or that product per se was just non-existent. And Sergio, who's a Spaniard as well, but he had a lot of experience in the US when he was at BCG over there. He just saw how that product works in a country like the US and landed in Brazil and said, well, there's nothing like that. And so at the end of the day, what he went for is for niche strategy, where he said, well, I'm just going to dominate this, which he did, and then I'm going to expand from that. So I think oftentimes what drives this model is the uniqueness, just kind of extrapolating, is the uniqueness of the fact that, in the US and Europe, the upcoming fintechs are kind of born in a hyper-saturated market where every single product is very highly served. Right. Whereas in Latam, you still have those niches where you can start, dominate the market, create a great business, and then expand from there using the early success as a funder for your own growth elsewhere. Right. And I think that dynamic is unique to the region.
Yeah, and I think it's one of the really exciting things about the region, because you've got companies that can reach decent scale pretty quickly, and with lower cost, as you say, than you can do that in the US. I want to talk about some of the bigger players in the region, like companies that traditionally weren't in financial services that are entering. You've got Mercado Libre, which is the Amazon really of Latin America, have multiple offerings now in the financial services. You've got Rappi, which has sort of started as a delivery app, and now they're doing a whole range of different things in finance. You've got obviously big banks are starting to kind of innovate as well. What's the biggest challenge for fintechs, do you think? Is it the Rappis and Mercado Libres? Is it the big banks, or is it something else?
No, I think the challenge is kind of all of the above, right? It's reading through a very fast moving market, a market that's changing very, very, very quickly, and where through the magic of embedded finance infrastructure, if you will, anybody who has a large customer base and an installed customer base can get into your industry, right? So I think if you look at fintech, 5-10 years ago, kind of the rules of the game in each vertical were clear, right? So either you're a lender and then you compete against the lenders and that's what you do, or you're a transactional company, payments company, and that's what you do, right? Whereas now the issue is you have all these platforms that have massive customer bases, and basically the barrier of entry from them to jump from their industry into yours is actually lowered through data and the kind of infrastructure that powers fintech these days, right? So I think there's a lot of things happening, and probably if I was a new entrepreneur trying to build my next fintech in Latam, what I would be worried about or spending a lot of time on is trying to refine my read of the market to see how these tectonic changes may apply to me, and where my niche that today seems like a great opportunity, how resilient that is in the future, and where other opportunities on the other side may emerge, right?
Right. Yeah. Speaking of that, I mean, are you seeing lots of new startups still happening? Are new opportunities coming across your desk from the region pretty regularly? I mean, and if so, what kind is it still Mexico and Brazil, or where is the entrepreneurial activity happening?
So there's maybe three things that we're seeing recently. So we're seeing kind of the smaller market versions of things that have worked in Mexico and Brazil. So the Peruvian neobanks, the Colombian lenders, the Chilean whatever, right? So we're seeing kind of that version, which again may or may not be that interesting depending on how regional and how big the market they want to address is. So that's still in existence. I mean, I think that in the bigger markets, what we're seeing that I think is interesting is, aside from a little bit more of an SME flavor to the market, which again, I particularly appreciate, there starts to be more sophistication on the infrastructure side of things, right? And it's a little bit like what we've seen maybe in Silicon Valley or to some extent in Europe, which is, everything started with direct-to-consumer propositions where the entrepreneur needs to build everything end to end because there's nobody who's able to service them or give them the technology or the processes they need. And then as you start having niches that are more dense, you start having the ability to create back-end services, back-end infrastructure that helps you and helps all these different lenders, neobanks, et cetera, be more efficient. And so what we're seeing is more and more drive to that kind of back-end infrastructure that I think is going to be interesting.
We're almost out of time, but a couple other things. You talked about SME lending. You said it's something that you find personally really interesting, and I do as well. It's one of my, I feel like it's something that fintech has really served the small business owner very, very well by providing easier access to capital. I mean, what are the things you're looking at there that, we've seen small businesses just decimated here in the US, across Europe. There's been so many challenges. I mean, are fintech lenders in the SME space are they stepping up in the region? Because obviously there's not as much government support as there has been in Europe or the US.
Yeah, well, I mean, there has been a little bit, but I think, at the end of the day, that is still a temporary matter. I think if you want to build a company that, that's going to be big in the long term, you need to think more about fundamentals. And I think the fundamentals in SME lending are around, integration into processes, and it's about data, right? So for example, just to take that as an example, so A55, our latest investment in Brazil, they do a kind of a revenue-based lending to SMEs in the digital economy. So it's all about understanding recurrence, it's about understanding payments, it's about integrating the flow, it's about speed of delivery, speed of underwriting, et cetera, et cetera. I think in things like that, there is an opportunity because you get the best of lending and a good team that knows how to access capital markets, and then on the other side you get the best of technology, right? So I think as long as you keep those two things in check, you can build interesting businesses. If you lose any of the two, then you're probably more in trouble, or you become irrelevant.
Right. Okay, so last question then. As we close out this year, it's been obviously a challenging year across the world. How do you feel that you're optimistic about LATAM in 2021 and beyond? I mean, how do you feel the region is going to continue to develop like it has been?
I would say I am optimistic about. Again, I'm optimistic about the region because I guess the fundamentals are there, and COVID may last, but at the end of the day, the fundamentals are there, right? I'm definitely optimistic about investing in LATAM because I think that if you spend the time to do your homework, to understand the market, and if you're an investor like I think we are, who like to spend time with entrepreneurs, helping them, giving them, sharing the knowledge that you may have gathered from other markets, and just spending time building companies with them, I think it's a great moment to come in, identify talent, and work with that talent to be, to build a very strong company when things really pick up again, right? So I am positive on both those fronts, and I think it's going to be a good year from that perspective.
Okay, well, we'll have to leave it there, Manuel. I really appreciate you coming on the show today.
Yeah, no, thanks. Thanks for having me again.
Okay, see ya.
All right, bye.
It's one of the reasons that I find Latin America so interesting is how Manuel kind of described there, where there are still niches that are untapped where companies can come in and really make a sizable company. And obviously that's going to be slowly changing here as more and more companies come in and get scale. But there is such an opportunity there still. And I think for homegrown players that I think will become. You've seen Nubank. Nubank is the largest digital bank in the world outside of China potentially, but it really has been an amazing success story there, and we're going to see more like that. And obviously, many of these companies, pretty much all the companies that we talked about here on the show, will be speaking at Lender Fintech LATAM coming up here in December 8th and 9th. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lender Fintech LATAM. The region's largest fintech event dedicated to lending and digital banking is going virtual. It's happening online on December 8th and 9th. Pandemic or not, LATAM is still the hottest region for fintech in the world, and Lender Fintech LATAM features all the leading players in the region. So join the LATAM fintech community online this year, where you'll meet the people who matter, learn from the experts, and get business done. Lendit Fintech, lending and banking connected. Sign up today at lendit.com/LATAM.